Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide divorce, mediation, and valuation services in St. Louis, Missouri. Today, we will actually discuss environmental, social, and governance policies, or ESG policies, and its effect on valuations with Mark Zyla. Mark Zyla is a valuation expert in Georgia, and he's the managing director of Zyla Valuation Advisors, an Atlanta valuation and litigation consulting firm. He's also the chairman of the Standards Review Board for the International Valuation Standards Council. He was also one of the primary authors of the education program that the AICPA and the Royal Institute of Chartered Surveyors for the credential, which is certified in Entity and Intangible Assets, or the CEIV, which basically certifies valuation professionals in the valuation for financial reporting purposes. What are the assets that we normally, so to me, this is kind of like a guidepost of, hey, valuation expert, you maybe haven't dealt with this in the past. So you need to look at the impact on cash flow. You need to look at the impact on risk. Depends on whether you're doing, a whatever model you use for your risk factor, right? Weighted average cost of capital, whatever it is, you need to understand it. I don't know if I would have even thought so far of the guideline company, because we're also doing that for transactions, right?
Sure.
And that's an important piece. But are there certain assets which may be directly impacted that you're seeing very often by these ESG corporate policies that we should also be looking at?
Yeah, there are. And to your point about cost of capital and this trend, just a couple of anecdotes. There was a study done of the S&P 500. Something like 90% of those companies have an ESG policy or a social policy. So it's becoming more and more prevalent among companies. And there's another one I found interesting is that the shoe manufacturer Allbirds, they underwent an IPO recently, and their prospectus, according to one article, they use the term ESG 91 times. So we're seeing trends that companies are focusing on these policies. So it's something that's happening. It's not, some esoteric, just a feel-good kind of thing. It's actually occurring. But as far as particular assets that are impacted by corporate policies, if you think about the companies, there's a framework. The IVSC, the International Valuation Standards Council, has put out a series of perspective papers written primarily by Kevin Prahl on these issues. And their suggestion with the IVSC is develop a framework to think about these policies on valuations, and think about it in terms of assets like brands. So the stronger a company's brand has, the more impact an ESG policy would have on its overall valuation. Human capital and technology companies that need to retain workforce, the more you have a need for human capital and a highly trained workforce, the bigger the impact ESG policies have on it. Things like customer relationships, if you're directly to consumers and you're seen as a socially responsible entity, you may be able to charge higher prices because people want your product, or your cost structure may be lower because you're more efficient in how you use your resources. Tangible assets, if you use a lot of tangible assets, that's a little bit more difficult to implement stronger policies, but there are intangible assets indications that environmental buildings and such, can charge higher rents and have higher occupancy. In technology, if you're more technology driven, you might be able to focus more on ESG policy. So they think about it in terms of framework. And at the end of the day, it primarily impacts intangible assets. And so if you think about environmental policies, it may impact your brand, that people are attracted to your brand, which tracks human capital. Your workforce wants to work for you because you're socially responsible company, and people want to work for the good guys. So indirectly it impacts human capital. It may impact your customers because in addition to the brand, it strengthens your relationships with your customers. So we see a lot of the enhancements in value from ESG impacting those type of intangible assets. But also it could impact tangible assets, things like, as I mentioned, buildings. There's studies that show, in fact, tangible assets may be a little bit further ahead as far as the impact of these policies, because there's studies that show, their higher occupancy in green buildings, higher rents, those type of things, which obviously enhance values.
Well, and I think that to your point, these things have been around for a while, but I think that society is catching up. And the reality is, it doesn't really matter if I build a green building or a neighborhood of green buildings if there's nobody buying green buildings.
That's right.
And so I think we just have had a disconnect for a long time of companies are actively investing in these programs, are actually doing them, maybe at the behest of the employees or management. But from a value perspective, we haven't had the consumers put value in place for that, right? You can always shop around, you can always purchase based on your value system, but you haven't really always had to. And we haven't put a lot of pressure on that. It's I don't care. I like their chicken. I don't care what their belief system is, right?
Mm-hmm.
Those types of things.